Hey, if you don't think a $100,000 salary is a good enough start to start building a lifetime of wealth, think again. This video, what I'm going to do is I'm going to cover all the things you need to know about how you can take your salary or your $100,000 in income and turn it into far more than you ever thought possible. So make sure you watch to the end for the full strategy that you can begin today. This is such a simple one, but you got to change where your money goes first. This is the 10% rule. It's been around since, basically the beginning of time when money existed. In order for you to build wealth, you can't spend everything that you make. You got to take a step back and you got to start saving money. And the rule, the simple rule, it's the first law of wealth, as a matter of fact, is 10%. You must save 10% of the money that you earn. That's right. So this is where we start, and don't move on until this part is done. So figure out if you make $100,000 a year, and we're going off of the gross, folks, are you saving $10,000, which would be 10%? If you're not, well, let's figure out how we can do that. Let's figure out where you're leaking money, and chances are it's because you're spending every single penny that you make. You see, we've gotten into this habit. We make money, we spend money. We make more, we spend more. That's what most people do, but you've got to change this. If you want to become wealthy and you want freedom, because money buys freedom. Money buys a lot of things, but that's your end goal, is freedom. And if you don't change where your money goes first and you don't apply this 10% rule, well, none of it's going to work. And number two, I love this one. You need to start building wealth through your own debts and expenses. You remember the first one, the 10% rule, change where your money goes first? But a lot of you were like, well, I can't save 10%. I got too many debts. Perfect. This one is how we start changing that dynamic. Because to build wealth through your debts and expenses is super easy. Now, let me explain how to do this. So I figured the best way to show you this is just draw it out for you. Here's the first one, the 10% rule. So we're going to save 10% of that $100,000, and that's going to be 10 grand. Okay, but now we want to start building wealth, and we're going to build wealth through your debts and expenses. So let's talk about your debts. Now, this might be different for some of you, but some of you maybe have like an equipment loan. Maybe you bought some exercise equipment. You financed something, a computer, and most of those equipment loans are going to go anywhere between 5 and 10% interest. Okay, this is what you're paying on that. And then maybe you did some remodeling, and maybe that's another, let's just say 9%. Cell phones, maybe that's 0%, but it's still money you're giving away. Your car loan might be 5%, actually just 6% now. And then credit cards, well, those can go anywhere between 10 and 29.99%. So this is the interest that you're giving away, but not just the interest. I also want you to think of how much money you're paying on each one of these. Maybe this one's $100 a month. Maybe this one's $200 a month. And I don't care, drop your numbers in. Okay, the cell phone might be $60 a month. Maybe you got that brand new iPhone 14 or whatever number they're on. Could be more than that. Your car payment, we'll just use $500 a month here. All I'm doing is I'm just showing you where your money's going. Your credit cards, maybe you're dumping $500 a month there. All we need to understand is that each one of these debts is taking money away from your family. Yes, you've got the remodel. Yes, you've got the equipment. You've got the cell phone. You got the car. Well, the credit card, you don't even know what you used it for, chances are. But here's how we do this. We drop the 100,000, or out of the 100, the 10%, okay? And remember what we said earlier. If you watched my other video, I told you to set up a segregated bank account. Now, what is this segregated bank account? It's just a second checking or second savings account. We want to keep your money segregated. So this 10%, that's what's going to go into this bank account. So you make 100, 10% rule. We just need 10% to go into its own account. And we'll go further on that. Now, what I want to do is once we do that, if we've got 10 grand over here, I want to look at whatever credit cards and whatever debts you have that have the lowest balances. So it doesn't matter what the interest rate is. Let's just say the lowest balance is this one. You owe $1,000 on your cell phone. And then up here on the equipment loan, you owe $9,000. Okay, so let's just start here. We then take the $10,000 and we're going to pay off this loan and we're going to pay off this loan. So you no longer owe the cell phone company $1,000, and you no longer own whatever this equipment financing, $9,000. So most people would stop there, but that is not how you build wealth. Remember, you're giving away $100 a month on that loan and $60 a month on this one. And roughly, let's just say 10% was the interest rate you paid there and 0%. So we basically have the ability to now take back $160 a month at a rate of about 10%. And what we're going to do is we're just going to set up a bill pay. I know this sounds silly, but transfer or bill pay, and we're going to automate this process. And we're going to have that $160 every single month go into this segregated account. So now we got $160 a month. Now, that doesn't seem like a lot, but you know what? Let's keep going. Next year, you make $100,000. So we now save 10% of that. So $20,000 has been saved. So now over here, you got 20 grand, but this 10 grand, or this original 10 left and paid these off. So really, now all we have is $10,000 here. But every single month, we saved $160 every month. So if you saved $160, that's $1,920 a month. So now you have $11,920. So we're going to come back over here to your debts. Let's say your credit cards you owe $10,000 to, and up here you've got another loan. Let's just say use this one. That's another $5,000. So what we're going to do is we're going to take this $11,000, because right now if you do the 10 plus that, you got $11,920. So the first thing we're going to do is we're going to take this newly saved $10,000 and we're going to pay off those credit cards which you owed $10,000. And let's just say you were paying 25.99% there. Great, that's no longer. But what we just did is we now freed up $100 or $500 a month. So let's add 500. So now instead of 160 going, we've got $660 going every single month. So now $660 a month is $7,920 a month. But you see, we only spent $10,000 of the $11,920. And up here, we can look at the rest of the debts, and we can knock this one down. So we used the $1,920 that was left over after paying the credit cards, and we just paid down this remodeling loan. So now you only owe $3,080. So let's keep going. The next year you make 100, you save 10. You're getting the drift, right? It comes over to the segregated account. The segregated account, you've been saving $7,920, which was that $660 that you were now recapturing right here. Okay, so now what we've got is instead of having $10,000, we now have $17,920. So we're going to look back over here at all your debts. Now let's just say you owe $15,000 on the car. What we're going to do is we're going to pay the car off. Okay, so now paying that car off frees up another $500 a month, and then eventually we're going to pay off the remaining $3,080, which frees up another $200. I'm just fast forwarding into the future. So if we add all these up, how much money have we recaptured and recycled into our life? Well, 5. That's 1,000. That's 1,200. So you can see here now we've paid all the debts off. It's taken time, about 4 years in total, a little less. Okay, we paid everything off. We no longer owe anyone else any money. We're recapturing all the money that we used to give away, which is $1,360 a month. That's $16,320. That money is now your wealth building. Every year, you got $16,320 plus the $10,000 that you save. You are now building wealth, and you didn't have to work any harder. You didn't have to work any longer, and all you had to do was be the bank. Which brings me to the very next thing. Be the bank. Number 3 is that. To do all of this, you had to think like a bank. Because in order to think like a bank, you had to recapture all the money that you used to give away to their banks, and now you're paying it back to your bank, except for in this step, you're actually borrowing and using their bank still, because that segregated bank account, that's someone else's bank. But stick with me, and I'm going to teach you how to change one thing over here and create your own banking system by using a specially designed and engineered whole life. But we're not going to get into that today. I simply want you to think like the bank. And that's exactly what we did. You saved 10%, you paid off all your debts, you recaptured all the money you used to give away. You are mimicking what a bank does. And there is no better way for you to start building wealth than this. Number 4, I want you to change the way you buy cars. So from here on out, now that we've paid your car off, you got a bought and paid for car sitting in the driveway. Now, the next car you're going to buy, what we're going to do is we're going to use this money that we're saving here, plus the amount of money that you're going to get from selling that car, and we're going to pay cash for the next car. But when you pay cash for that car, the next one, remember, if you would have financed it, it would have cost you roughly $500 a month. You're going to add another $500 onto the amount that you recapture. And you might say, that's stupid, but it's not stupid. You see, this $500 a month you were giving away to the car finance company, they were charging you 5%. So if you want to think like the bank and you want to be the bank, then you might as well change the way you buy cars to buy cars the same way you would have bought using their bank. So that means you're going to pay your bank back with interest, that 5%, which is the $500 a month. So if we add $500 here, you're now at $1,860, and $1,860 times 12 is $22,320. But here's the cool part. By changing the way you bought that car, this enables you to get all the money back for the cars that you buy, drive, and own. Why? Well, because you're paying yourself back with interest. You're getting all of the money that you would have given away to the finance company back. So by the time this term is done, and most car loans are 5 years, by the time the 5 years is done on this car you just bought, all the money that you would have given away is now in your segregated bank account, plus interest. So you did get all the money back for all the cars you ever buy, drive, and own by changing just that one thing. And the fifth thing is the last one. There's no get-rich-quick solutions. Wealth is a marathon. It's not a sprint. And compound interest takes time. Now, I didn't show you how to use compound interest, but if we did use that specially designed and engineered whole life insurance policy, and instead of putting the 10% in their bank, we put it into your bank, that specially designed whole life, you would have been earning compound interest on all of the money, even after you did everything we just talked about. But that's for another video. The most important thing for you to realize here is that none of this happened quick. It took years for you to do this. I mean, by the time you bought that car, it might have been 3 or 5 years, but now look at how much money you're saving. And this is not new money, folks. This right here is the only new money you're saving every year. All of this, $22,320, is money that you would have given away to somebody else's bank. Stop trying to get rich quick. And if you loved this video, we're going to take you to the next one. And this next video right here, what is the most important factor for wealth creation, is going to wrap this all up in a pretty little box with a bow tie on it and teach you how this whole system will work for you. Thanks for joining me. We'll see you on the next one.